Good morning, everyone. Today is Wednesday, January the 18th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. Last night, we had the Bank of Japan say that they were not going to shift out the yield curve. And what that's done is weaken the dollar. And indeed, from weakening the dollar, it's caused the dollar to fade a bit. It's caused metals to rise, and the market is also rising, where we can see it from the daily charts here for the ES, which is running in real time, and the ES is the E-mini S&P futures. So we'll look at SPY in just a bit, see what SPY is giving us relative to the motion here. But what I want to talk about is what we are looking at, and then I want to answer a couple of questions very quickly from the question tab in the Benzinga Pro platform. All right, first of all, what we are looking at is 4 days of trying to spike out of this range and still coming back in. So if we close out of this area today, it means that any kind of pullback we have is likely to stretch into our 40-49 area. That's what we're looking for. Now, we've had an extreme reading on the new highs and new lows. The first one we had was a few days ago, and now we're seeing consistent tests of the charts that are telling us, hey, listen, we've got readings that are telling us that there's a lot of buying under the covers. Now, why are people buying? Are they getting in front of the move that they think is going to happen? Yes, nobody wants to be left out. Everybody felt like they got left out of the 2020 move and then the 2021 move, and then they got in late, and 2022 sort of shredded them, and now 2023 is here, and they're all saying, hey, listen, I don't want to get left out. The fact of the matter remains is that we're still sitting inside of the range of the prior month, right? We're sitting in that area, and so really anything that we drive toward is going to give us a resistance line that's likely to give us a little bit of a pullback. My thought is until the FOMC comes in and says definitively this is what we're going to do, we're very likely to chop around in a range. What we do see is the dollar really losing strength, and a lot of folks are saying it's because the market really has got a lot of dollar liquidity right now, and that, of course, is driving metals and securities higher. So what do we want to look for? My thought is the following. From the daily perspective, pullbacks are still buy zones. Hey, let's look at the 4-hour and see how this is tracking. Again, our 4-hour is up. Our daily is up. The weekly is sideways. The monthly is a little bit down to sideways. So we really are looking at sideways formations that tell us if we come down here, we're likely to bounce. The pin, for those of us that think about option flow, the pin is at 4,000. All right, so let's get the SPY and see what we're looking at. A lot of folks are saying, hey, listen, how do I manage my 0 DTEs? Someone said, hey, I got in late to the trade and I got stopped out. So here is what it is that I'm telling you for me. My stops are always alerts. And when those alerts hit, I'll go back and I will assess. If the alert hits and I say, you know, that's it, I'm done, I won't say anything, right? Because I always have the stop out there. But if the alert hits and I see that there's room for the trade to run, you're going to see me say, listen, I've added to my position here, or I'm holding my position here, and I'm going to move into the next space. So 2 things I want to share with you. When you see a price action event moving against you, let's say I say get in at X, Y, or Z, whatever price it is, 110. If you get in at 105 or 101, or something significantly less than where it is that I've positioned, you're already exposing yourself to more risk. My suggestion is the following. What I'd love for you to do is put it out as a limit order and let the market give you that price. Don't be afraid of missing out. There's going to be another trade the next day. These trades are very profitable, They move very, very nicely, but don't chase them, okay? It's just not the best thing to do. So today we're looking at a potential break to the north, and someone else asks me, hey, could you tell me a little bit about how you position these? My thought is always the following. Am I sitting in an area where in the past I've seen prices come back in? And so I will look at something and go either yes or no. And I will lay that 0 DTE right on top of that line. It doesn't even matter if it's deep in the money, because when it gets deep in the money, and that's 2 strikes for the day of expiration, that's fairly deep in the money, it moves almost in a 1-to-1 ratio with the actual flow of action. So you can see very sharp movements in the direction of motion. What we might do is put together a little storyboard, and we can come together and do a Zoom, depending on how many folks are interested, or if I have the ability/time to sit down and walk through that with us. We'll work it out. I'll talk to the folks at Benzinga and see what we can do, but we can talk about how to position, what actually happens with the option movement. Listen, I'm here to teach you how to trade. When a stop gets triggered, sometimes it will clean you out if you're hard on the stop. So all of my stops, unless I have said this is a hard stop, it's just an alert. And I'll go to the price and I'll say, all right, do I look like I'm topping here? Does this look like it's topping? So here's where we are right now. This morning, we're up at 399 and some change. And guess what? We've started to fade, because that's what we did the last time. So we'll see how it goes. My suspicion is we need a pullback. We need a place to rest. But until then, we just do what the market tells us.